We're joined today by Grant Ryan, Property Director at Ironfish, one of Australia's leading off-the-plan property investment selling agencies. Today, we're talking about the outlook for off-the-plan apartment sales in Australia. Thanks for joining us on The Urban Developer.
Thanks, Adam. Great to be here. First one of 2022.
That's it.
Anyway.
Since the pandemic, it's been a fairly volatile time for off-the-plan apartment sales. I think it's fair to say that. How would you describe the last 2 years for your business?
Well, I think the one word that comes to mind is change. And as they say, change or die. I've observed most businesses, for us, we had to shift online, as you yourself with your own business had to do. We've all had to embrace it as an opportunity. And so a lot of the educational ways we interact with our thousands of customers, that's obviously had to shift a lot more online. Also, the way we launch projects and things has changed. So it's been an intense time, to be honest, in the last couple of years, but we're really excited about the next few years. I think in terms of apartments per se, look, we've been in a fairly risky environment still. I know sales are, there's very much a retail fish jumping in the bucket, I call it, sort of environment, and that's all great, but it does feel like something's changing in the market right now as we head into a much more riskier environment. And I think for apartment sales, the strategy is going to have to be really important for developers to get that right.
And before we unpack that a bit further, just for those that aren't familiar with the Ironfish company, just tell us very briefly what you guys do.
Yeah, absolutely. Well, we're probably Australia's largest property investment services platform. So we develop a long-term relationship with customers. So we've got probably in excess of about 13,000 investors who invest with us. And essentially what we do is we help them build a property portfolio. So that's on the customer side. On the adding value to the customer, it's a win-win with developers. We're really an opportunity for quality developers, a portal, if you like, or an opportunity for them to place early sales, pre-sales, and really good quality projects off the plan. And so we're involved in very strategic early meetings with developers, and we're very selective about which projects we work with.
So you obviously listen to both sides of the coin very, very deeply.
Exactly, both sides of the coin. Yes.
That's right. And so, obviously you get a pretty deep sense of what the next 12 months would look like then by talking to those people. What are your expectations for off-the-plan unit sales in the coming year?
Well, it's really interesting you say that. We call ourselves boots on the ground because it is. A lot of developers really, there's a bit of distance between themselves and what's actually happening out there or what they're being told. The architect's going to tell them the design's amazing. The funder's going to tell, but it's only when the rubber hits the road that you start to really understand what's happening. And so I frequently get calls from developers wanting to get our take on the market, what's actually happening. So look, if I was to say what's actually happening out there, I think we're in a point of transition. I know we've got an election coming up and we're about to hit an upward rate cycle. Now, those two things are definitely going to taper out a lot of what we think is the owner-occupier sentiment, the sort of the crazy retail environment that we've had probably in the last couple of years. That's going to fade out a little bit, but investors are on the rise and there's a lot of really interesting things happening. I'm sure we'll cover some of those things today. I think developers should have a lot to be positive about, but the one thing I will say is they're very, very cognizant of a couple of key risks. One's construction risk, construction cost risk, which is obviously something that you feature in a lot of your articles, and it's something that is in conversations every day. If you can't get that locked in, it puts all sorts of other things at risk. But there is more sales risk as well coming in, and that's why getting that strategy right, I think, and getting the project right is really important moving forward certainly for experienced developers.
So it's a market in transition, owner-occupier sentiment starting to sort of slow a little and the investors starting to see the opportunity, albeit in a qualified manner. Are there any markets that you're identifying as being either outperformers or underperformers? Talk to the capital cities.
Look, I think, because the big themes we think of 2022 and as we move into 2023 are going to be affordability, but affordability is bandied around a lot. I also like the term value for money. I think buyers are now a lot smarter, whether they're an owner-occupier or an investor. They're more astute about and more educated about what they're getting into. So you can't just throw in that private dining room and the everything else and you just try and match other things. They want projects with integrity, with real design. They want a place that's more of a community. And they can be larger projects, but that's often harder to achieve with larger projects. So I think buyers are definitely more discerning. As far as locations, and everyone always wants to know which locations. Look, definitely the strongest sales demand we see in 2022 in terms of apartments is going to be Queensland, South Australia, and WA, those three markets. And if you look at Queensland and WA, they were underbuilt in the last few years. So I was chatting to a friend the other day, and I related it a bit like the bushfires, where these terrible bushfires, and the reason why they caught on was because everything was tinder. It was dry as, there was nothing. And so when things sort of happen, you can't just turn the tap on really quickly at them with high density product. And that's something that a lot of people don't understand. We almost watch the market in real time. But what we don't realize is by the time you design it and get it approved and do it, mate, it's 3 years to put anything on the table. And we really have, I think, underbuilt quite a lot. There are opportunities in Sydney and Melbourne too, but there's a little bit more, it's a bit more patchy in terms of that market. One positive I will say that we are definitely seeing now is that definitely those inner areas of Sydney and Melbourne that were hit really hard, we know in terms of COVID. Obviously, there's a really good article about rental growth just from the December quarter and rents outperforming houses and that market really coming back, including, Docklands, South Bank, even all those sort of slightly higher supply areas. So there is that's probably the biggest theme would be around the rental starting to drive, and it's going to pull investors, we believe, back into the market this year.
Now, you've got several offices in China. What are your expectations in terms of offshore and FIRB demand for off-the-plan units? When's that coming back?
Yeah, well, it's an interesting market. I think we've all seen for those of people who have been heavily involved in that offshore mainland Chinese market, things have slowed really for the last 2 or 3 years in particular. It has become a much more problematic market. But with COVID, what it's absolutely done, obviously, is we've got the borders have been closed predominantly, and that's closed getting out of China and obviously into Australia. And so a lot of the China demand, Adam, comes from two places, and that's really education migrants and business migrants. So education migrants, people's children coming for university, etc., and then mum and dad might buy or help fund them buying their property, etc., and then they get established here. Or business migrants. Now, business migrants is going to take a little longer to turn back up again, but certainly we're much more positive in 2022 that the educational migrant Chinese market could improve. But it is a tricky one, and it's going to take a little while for it to come back to. I don't think it'll get back to quite where it was, but it's going to get back to a really good level. We're relatively confident.
Yeah, in time.
But there's some unknowns. You've got to face it. There are some unknowns with that market.
Absolutely. Now, the interest rate environment everyone's talking about, obviously, we're at that inflection point where it starts to turn around and lift off, as they say. How do you see interest rates really shaping the next 12 to 18 months?
Interest rates are a really interesting phenomena, because for me, they're an emotional phenomena. The reality of interest rate, when people buy property, they tend to be able to find a way to hold on no matter what. But it's that fear that comes with it when you change the cycle. Now, when they start going down, let's face it, there's not a lot of fear. People are very happy. But the moment it comes up, even if there's only a couple of small rate increases, what you'll find is there'll be a proportion of buyers who will just count themselves out on the outer. But for most astute investors, if I focus on investors here and buyers, I don't think they're going to be that put off. And there's probably three things that are going to happen that are going to impact it. The first one is that whilst rates are going to go, and yes, they're on the turn, they're not going to go up very far. They're going to stay moderately low, really. We're talking about 4 or 5%. So when you look at long-term rates, I think there's quite a lot of comfort around that. But those people that don't really understand that or have really bitten off a bit too much, you are going to find some of those people we counted out. But for investors, there's some differences. Interest on your loan is tax deductible. So any interest rise is less impact on them than there is owner occupiers. You then got increasing rents, and we see the sustained increase in rents nationally. Nationally, it's amazing. There's some national market that we've got everything kind of moving. That's going to come up as well too. So there's a couple of things there, plus it's going to stay lower for longer. So we don't believe it's going to have a huge impact, but it will temper what we call the over-exuberance of the retail environment at the moment. So developers are going to have more hybrid strategies going.
Yeah. And then just finally on the build to rent sector, obviously you talk to an investor audience in the apartment sector, as well as other sectors, but largely that's the case. Build to rent obviously is filling a piece of that demand. How do you see the interplay between the two, build to sell and build to rent markets, impacting the traditional MAR and PAR investors?
Well, it's interesting you use the phrase build to sell, and that is the term that's often used. I also like build to own, because you see, what we do is we represent people who are private ownership. So you have a building, say there's 100 apartments, and there's 100 private owners. And what BTR have done is they're coming in, and they're on a more corporate level, they're coming in and they're taking huge chunks of supply out of the market and out of the opportunity for private investors. So it's actually quite a significant change in the market. In terms of how it's going to impact private investors, I see it as a positive overall. It's just changing one of the dynamics, because one of the things build to rent operators historically have been able to do is to run really good buildings. And if they can do that, and then that helps to lift, I suppose, more the brand of living in an apartment building, and and it might set a precedent for more private buildings maybe to focus their buildings and manage them in a similar way. Whether build to rent operators here in Australia get higher rents as they've done overseas, that the jury's still out on that one, because I think whether it's a build to rent or a private building, they're all offering amenity and amazing facilities and someone to, wash your dog and whatever else, so it's a very interesting space.
Well, it's always good talking. You've got tons of insights, which I think we could unpack for another 20 minutes. Grant Ryan, thank you very much for joining us, and we wish you all the best for 2022.
Thank you, Adam. Same to you.